Hi, good afternoon. You know, the RBI has asked banks to recognize more restructured assets as bad assets in the quarters to come. So, in effect, banks will have to see additional provisioning. How would you read into that news flow, and which of the banks you think could get impacted the most?
See, all the large banks in this country, both in the government space as well as in the private space, are going to get hugely impacted. Because mind you, even these 150 companies which RBI wants the banks to recognize, I don't think it includes some of the very large leveraged corporate groups where each of them, the individual exposure to the banking industry would be 30,000 crores at a minimum. Now, if all these accounts are to be classified as NPA, there's going to be a huge dent to the banking industry. So it is to be expected, and I've been saying this for some time, that the asset quality issues have not plateaued out at all for the banking sector, and you're going to see far more worse days to come.
Hemindra, hi, good afternoon. So, which ones are most vulnerable? We have seen, sort of big correction in PNB. We've seen some bit of volatility in names like SBI and Bank of Baroda. Out of the large cap ones, which are the ones, Bank of India as well has been quite volatile. Which one do you think is most vulnerable?
See, all of them, all the large banks, even some of the large new private sector banks which have corporate exposures are going to get impacted. And that means all the big names who have given extensive loans to the corporate sector, especially for infrastructure. Now, see, a lot of these cases, the RBI is saying that once a bankruptcy court comes in, the issues may get resolved. But in our country, as we all know, until stringent action is taken, nothing ever comes back. So until some of these industrialists, have been caught and probably put to jail, then only can we see some recovery in bad assets coming in. But until then, there'll be all talk and no action.
Okay, let's talk about some of these private sector banks, because over there the crack has been extremely pronounced, especially in a name like ICICI Bank. And we know the exposure that ICICI Bank has to some of these stressed assets like JP Associates, GMR, Suzlon, etc. But how do the valuations stack up now, Hemindra? Because ICICI is trading at a sub 2 times forward price to book, which is cheap compared to its historic valuations. Do you think it still needs to price in some more of the bad news, or the worst is already in the price?
You see, when you say it is cheap compared to the past, what is the past? I don't think the Indian banking industry has ever seen such a huge credit expansion taking place, and that too towards an infrastructure sector where much of the power projects are in the doldrums. So here I don't think the relevance to the past may be that relevant. Okay. So I think you're going to see such huge, and that's the whole problem. You see, if each of these business groups which have exposure about 60,000 crores to the banking industry, if they are to be classified as NPA, then all these banks are going to have severe problems. And therefore you find there's a great deal of reluctance on the part of bankers, and very naturally so, to identify as these accounts as NPA. Because if that were to happen, the Indian banking industry would not look good at all, and it would reflect even on the Reserve Bank of India. So naturally, everyone would like to talk about it, but I don't think anyone really wants to reveal it. Because if it is revealed, the picture can be very frightening.
Okay, so Hemindra, let's talk about some of these stocks then. We've seen ICICI Bank continuously hit 52-week lows. We've seen that with Axis as well. HDFC Bank and Kotak have been relative outperformers. What would be your pecking order, if at all, if you would want to buy any of the banking names?
According to me, one should avoid the entire financial intermediary space, because I said there's a lot of pain still to come. But if, like a lot of institutional investors, you have to be in this space because of the very high weightages that the finance space has, then I would say that yes, HDFC Bank and Kotak Bank are relatively better off than the others. All of them are going to get impacted because all of them have some form of corporate exposure as well. But yes, those two are the names which if one has to be in this space, then that will be one of the safe havens to be in.
Okay, Parag, you are nodding your head. You would agree with that?
So, of course, I cannot comment on one part of it, but yes. Definitely Kotak seems to be the bank which is least exposed to all this, whatever is going on in the banking sector on the corporate side. But of course, the valuations have also cracked significantly. So I would like to bottom fish in something like BOB. Where in the last quarter they had taken a large hit on one of the corporate accounts. So and plus there is a new management change. So I think so I would be bullish on say Kotak in private sector space, BOB, in PSU bank space. And of course, on the smaller private sector bank side, Federal and City Union.
Okay. What about you? Any of the PSU banks? You mentioned the private sector banks and, what could be the relative outperformers there. But within PSUs?
See, within PSUs, I would go for one of those medium-sized PSUs, Syndicate Bank.
Okay.
Earlier it has not been extremely aggressive at all in infrastructure loans. I think that has really paid them extremely well. And therefore, according to me, while this bank, like all the other banks, will also get impacted, since it does not have this high exposure to infrastructure, particularly private sector power generators, this will be better off. One thing, even Bob, I would partly agree that yes, it is one of the better off PSU banks, in this sector. But unfortunately, in the last couple of years, earlier, it has been extremely aggressive in increasing its foreign asset portfolio. And in the Indian banking sector, the bulk of your foreign assets are really underlying Indian corporates. I think there will be some more pain for Bob before, I think the good days will come.
So what happened to that, that re-rating of Bob with the new quasi-private bank and the new CEO and MD, Hemindra? That market spoke of about 3 months back.
Okay, see, my take on that is different from the market. According to me, taking a private sector bank and putting him in charge of a large government bank will not resolve the problem. Because typically, bankers who have been in the foreign bank space and the private bank space have very limited banking experience in India. Mainly, they are, exposed to, corporate banking or retail banking or the foreign and the domestic treasury departments. While the PSU banking space is far more variety and they're far more complex and there are a lot more issues to handle. So therefore, according to me, having a private sector or foreign banker X in charge of a government bank may actually, may not be as positive as the market believes. And in this case also in Bank of Baroda, if you look at its foreign asset portfolio, which has been my concern for some years now, I think there is more pain ahead from that segment.
All right, Hemindra, thanks a lot for your time today. So that's the view on banking. Let's get a technical check as well on some of these banking names. We've seen a bit of intraday recoveries. Mithil, in the banking pack, is there anything that you would want to buy or short?